what company combines Uber, Amazon, DoorDash, and UPS into one giant of e-commerce? Allow me to introduce you to the South Korean colossus, Coupang, and how it does a little bit of everything in a big way. Hey everybody, and welcome back to Dollars and Cents, helping you make sense of making dollars. Previously on this channel, I've stated that international companies present a terrific opportunity in today's uneasy market, and I'm saying it again for this company. But first, let me give you an idea of what Coupang is and how it's grown to be one of the biggest companies in South Korea. Coupang was founded by Bom Kim, a South Korean national who came to the US at the age of 7 and spent most of his days here. While Kim got accepted into Harvard Business School, he interestingly dropped out after just 6 months and worked instead for Boston Consulting Group. He also opened a magazine that folded only a year after its inception. Seeing opportunity in his home country, Kim returned to South Korea. Originally, Coupang started life as a pseudo Groupon, but quickly morphed into an e-commerce platform. Back in 2015, Coupang was set to go public too, but Kim, believing he could build a better company, pulled the plug on the IPO and completely changed the company's direction, and it looked like it worked. 2020 became Coupang's busiest year, branching out into new sections such as Rocket Delivery, Rocket Wow, and Rocket Fresh. If you want a comparison for Rocket Delivery, think of UPS. Rocket Wow is the company's equivalent to Amazon Prime, and lastly, Rocket Fresh can be compared to DoorDash here in the US. Yet the crazy part is, this isn't even half of the businesses owned and operated by Coupang. This is a fairly small part of a much larger company. Before we can get into all the great aspects of Coupang, we need to start at the most important part, the financials. It's paramount to first understand what's under the hood of any company, see if that motor is stable and running smoothly before dropping any money into it, including foreign companies like Coupang. For this video, we'll be jumping back to Morningstar. In my other videos, I've used the 8 pillars because it's a great tool, but it lacks data on international companies like Coupang. Also, understand too that Coupang is a relatively new company, so we're not going to be getting much financial data on them, whether we're using 8 pillars or Morningstar. We'll glean what we can to get the best picture possible. We have about 3 years of financial data to go off of here, so let's start where we always do, with revenue growth. Back in 2017, Coupang took in $4.05 billion, and in 2020, they brought in just around $12 billion. I found this to be expected, honestly. With the huge push for online services in 2020, I wondered why, Coupang became one of the main beneficiaries in the South Korean market. Combine that with the fact that Coupang is still a relatively small, yes, small business with a solid way of doing business, seeing its revenue tripling in 3 years, and you can see why this is reasonable. After revenue growth, I'd usually look at shares outstanding next, but in this case there's no comparison to former years, it's just still too young of a company. Of course, moving forward, I'll be paying very close attention to this. These small hypergrowth companies tend to issue shares at a tremendous pace. I wouldn't be surprised to see 25 to 30% share dilution in equity over this next year. Now we're going to pull directly from Coupang's 10K for total current assets over total current liabilities. If you don't know what a 10K is, it's a document that all public companies have to file quarterly containing all sorts of financial data. I think any serious investor should definitely look through a company's 10K or 10Q, the end of the year filing with information like financial data and future growth plans. Now on to total assets versus total current liabilities. Coupang has total current assets totaling $6.1 billion versus total current liabilities of just $2.9 billion. Again, this is a great sign. Usually though, it's expected to see these small tech companies have more assets than liabilities. Now another huge thing I want to highlight is Coupang's cash on hand, which stands at $4.3 billion. This means that Coupang has enough cash on hand to pay off all of its current liabilities. This is certainly something you want to see in any business. It means that if any emergencies pop up, then Coupang can pay off all short-term debts. Lastly, we're looking at free cash flow. This is where we run into our biggest issue. Coupang isn't profitable. While this is changing, last year was the closest it's ever been to profitability. In 2020, Coupang had only a net loss of $180 million. This stacks up nicely against the last 2 years. 2018 resulted in a net loss of $790 million, and 2019 had a net loss of $530 million. With 2020's net loss of $180 million, the company comes very close to nearly being profitable. Of course, this means our usual method of multiplying free cash flow by 20 to get an expected market cap doesn't actually work, as the company isn't profitable yet. This also means that we can't get an accurate number for our return on invested capital. According to Morningstar though, it looks like Coupang is still able to invest capital at a rate of 13% or so over the last 3 years. Last but not least, since the company is still so new and rather unprofitable, Coupang doesn't pay dividends. In my opinion, this is a smart move because you don't want a company already losing money to lose more money paying dividends. With all that said, I think Coupang is a relatively stable company financially, with my only real issue being that they aren't profitable yet. Coupang is the first South Korean tech company to go public in 10 years, for good reason too. South Korea presents its own very specific challenges. You may not know this, but South Korea is about the size of Kentucky. It's riddled with uninhabitable mountains, which means that most of the 50 million population is jam-packed into an area the size of Rhode Island. Yet this ultra-condensed aspect of South Korea's geography has actually played to Coupang's advantage. The company has over 25 million square feet of warehouses in 100 locations in 30 cities across Korea. Coupang boasts about their ultra-fast delivery times because of this interconnectedness to the country's cities. The average Korean lives just 7 miles from one of these warehouses. If they place an order anytime before midnight, they can get their delivery as early as 7 a.m. the next day. Sounds familiar, right? These draw many parallels with Amazon, the e-commerce giant based here in the US. The proximity to a warehouse and the speedy delivery times are the main part of Coupang's business. Another significant part of the company is called Rocket Fresh. This is Coupang's fresh food delivery arm, and it's benefited massively from this interconnectedness with other aspects of Coupang's business, especially that proximity. Coupang in general has been able to cut around 75% of the cardboard boxes and other packaging materials from its business. This saves massively on costs. With the reusable packaging that Coupang offers, customers can set out their packages and have them be collected by Coupang's Rocket Men, or its delivery agents. In a sense, Rocket Fresh is the DoorDash of South Korea. More recently added was Coupang Play, launched in December of 2020, and it's already showing great promise. Coupang Play is like Netflix. One of the benefits of having a premium subscription to Coupang is that you actually get access to Coupang Play for free, almost like Amazon Prime Video is to Amazon. Just having the availability of a streaming service included with another loved product is bound to give it a competitive advantage at the outset. This has actually given Coupang Play a competitive advantage over Netflix in South Korea, even though it may not be as great as the latter service. But that's really the brilliance of the business. Coupang bundles great services similar to Amazon, DoorDash, and Netflix all in one company. I generally don't like the idea of comparing any company and saying it's the Amazon of X country, but it's certainly true for Coupang. For me, though, the greatest aspect of Coupang is that it's still founder-led. I have a particular bias towards founder-led companies like CrowdStrike, Spotify, and Coupang. Also, I believe that founder-led companies are by far more apt to be better run. The visionary who saw a need or problem wanted to make the world a better place and started a company to rectify that problem. This, in my opinion, is going to be a more effective leader than any company on its third CEO in a year. Even with all these phenomenal aspects, Coupang has a problem. A big problem. The problem is especially impactful to Coupang: continued growth prospects. Coupang already has roughly 20% of the South Korean market, making it the second largest e-commerce platform in the country. Along with this, it already has 14 million active users as well. This means that 30% of the Korean population actively already uses Coupang. Assuming Coupang continues to grow at the rate it has been, this presents a very interesting problem rather quickly. Coupang could very well hit a ceiling for revenue, affecting its growth prospects in the future. The market in South Korea is fairly limited, and it seems that international expansion is not core to Coupang's growth strategy either, disheartening to be certain. Some hope, though, comes from a report that South Korea's market is estimated to be $540 billion over the next 3 years, but this is just some analyst projection, and we've all seen how bad those can be. This is really the only major issue that I could find with Coupang, though. Sure, there might be a few more, but non-international growth plans certainly puts a damper on my eagerness to buy this company. If Coupang manages to show signs that it can expand into global markets, I believe it can continue to be a dominant player in the e-commerce space. In past videos, I've said that I don't see much value in US companies right now. Yes, there are some great companies out there, just not trading at great prices, including Coupang. For me, before I introduce it to my portfolio, I'm going to wait till the price of shares hits around the $20 to $30 range before buying, because that's the ideal price for me. I'm still certainly eager to believe it because I believe Coupang has the potential to be a world-class company. Even though Coupang is still relatively young at 11 years old, it's already the dominating e-commerce business in South Korea and still growing tremendously with a solid financial fouting. It's founder-owned and founder-led. and rapidly expanding into all sorts of different services, a jack of all trades you could almost say. Quick deliveries, food services, streaming platforms, and so much more makes Coupang a viable option for introducing an internationally based company into any investing portfolio, and again, a potentially world-class company. As always, I hope you enjoyed this video. Like, comment, and subscribe for more content like this, or chat with the community in my Discord, link in the description below, and until next time, I can't wait to see all of you in the next episode of Dollars and Cents.